Welcome back, Mr. SIPguide family. How are you all doing? I've just started YouTube channel 1 day ago, and I'm glad to say that we already have 12 subscribers. Thank you so much for the love and affection. Please comment down below whatever questions you have so that we can clarify all these things one after the other. And I also will start making videos based upon the comment section, so it will be easier for both the relationship forward. And once again, thank you so much for all the love and affection. Let's get back to the content today. Yesterday, we have discussed about what mutual funds are, how are they formed. It's a very basic content, but I think most people didn't have an idea. I didn't have an idea personally beforehand. When I started understanding mutual funds very good, that's when I understood how beneficial they are. Yes, there is a risk to reward ratio, but where there is no risk, this is everywhere involved. So let's dive into the one important concept today. That is, what types of mutual funds are there? What categories of mutual funds are there? And how can I choose what mutual fund category is most suitable for me and for you? Let's dive into the content. So just like every single video that we do, we will start with a small example so that we can make things much more simpler and it's very easy for you to understand also. So when you go to a restaurant, the first thing that you do is look at the menu so that you can order the dishes that you like better. Just like that, imagine there's a menu card of all the mutual funds and there are different categories of mutual funds which suits individual taste. So first things, let's talk about the equity fund. So equity fund are best suitable for people who want to take a risk in their life, because these equity funds predominantly invest into the stocks that are available in the market which focus on growth more. Okay, it's like a spicy dish in your menu card. Just like spicy dish are very good, they're also volatile, which means ups and downs in the market are very frequent in this mutual fund or in the stocks predominantly. So what happens is, if you are a value investor or if you're looking for a very long-term investment like your retirement plan or whatever it might be for 20, 25, 30 years, then I would say that equity funds will give you the most amount of returns because the risk is involved over here. But don't worry, risk has equal rewards, so the rewards also are very huge in the equity funds. Come to the second one. These are debt funds. Now, what are debt funds basically? These are the most safest funds that are available in mutual funds especially. So they usually invest into government bonds, safe security investments which have stable returns for yourself. So consider these as side dish for whatever main course you order. I won't say you have to put all your money into the safest investment that is debt funds completely, because what's the point of investing complete money when the returns are very small? But I won't say ki don't invest into them, because these are like side dishes for you. Main course has to be different, but side dish has to always be there as a part of your meal. It's like a balanced diet kind of a format. So index funds are basically, it's a choice of the fund manager or the company. They choose certain companies which are performing very good across 3 to 4 years or 5 years or maybe a longer period of time. So they trust these companies very good, maybe they have given much better returns. So it's chosen by the fund manager or by the company and they form it personally. So every company, it may be ICICI, HDFC, Kotak or Franklin Templeton, whatever company you go for mutual funds, every company has their own index funds. So believe me, this is very kind of a risky, but ultimately it depends on you how much you trust the company. Back once again, I won't suggest you initially, if you're investing right away, please go for any other fund, but again matters to you. So I don't, this is clear. So there is equity fund, there is debt fund, there is hybrid fund, and there is index funds. So now as we have understood that what categories of mutual funds are available for us, now question comes is what mutual fund is most suitable for me. So let's take an example that if you are an aggressive investor, you want to take a risk but you want high rewards for yourself. Coming to second point, I am not a person who usually take risk. I want sustainable returns. Maybe smaller returns, I'm completely fine with that case, but I'm saving for a short term period. Then I would say the debt funds are the best option for you to go for. That's what been taught for me. That's what I'm teaching you also in the same case scenario. That's the biggest part. Now, coming to a person who's newly entering into a market, as you enter new, you know how greedy people can be. Even I was same thing, but once again, if you want good returns with a minimum amount of risk, then I would say hybrid funds are a very good option you can choose for yourself, because this involves a little bit of risk, but returns are also substantially a bit greater than the debt funds again. So if you're new into stock market, want a good return for yourself, and also take small amount of risk, then yeah, hybrid funds are the best thing you can go for. Last but not the least, if you have already spent a good amount of time with one particular company, understanding them better, giving you good returns previously also, then I would say the chef's choice, the index funds are very good, because this involves a personalized choices that have been done by the company and also the fund manager, together understanding the market across the years. See, I won't say they can invest into index funds right away. It's your personal choice. But yes, if you have already been a part of mutual funds, I think a small token of money can now go into the index funds. It's a very good thing that you can go for. I hope this video was informative. I hope you have understood the categories of mutual funds and what mutual fund is very beneficial for you to start with or to continue with or to exponentially grow with. It's good to see you all. Please comment down below with any questions that you have, because I'll start making some videos based upon those questions apart from the series I'm proceeding right now. Same way, please share this video with anyone whom you feel this information can help them, or you want to introduce them into the market back once again. It was nice to see you all. Please do subscribe and do follow us for more updates. Thank you so much.